Hello everyone. I have just sold a few companies and bought them again on my IKE account. I don't want to buy Mondelez, Caterpillar, or companies that don't fit my current investment philosophy ever again. I had to change. Many investors usually fall in the trap of owning the companies which don't fit their investment philosophy when they are very high up. For example, I have Caterpillar, which is currently 100% up. And I don't want to fall into the trap of buying stocks based on emotion and not on calculated research, as I have unfortunately done in the past. I want to change my approach, systematize everything, and hopefully everything you see in this video you will be able to somehow take away from my mistakes and implement this strategy into maybe your investments. This isn't financial advice. So first of all, I have created a PDF. I started writing down my thoughts and I started to outline everything that goes into my current investment philosophy. The goal of it is to make me stay focused on the decision making, and it should be based on logic, not emotions. I will, of course, go over my portfolio and how it looks right now. So let's start off. First of all, here's my investment philosophy. I have divided it into three pillars. And the first pillar is moat businesses. So when I buy a piece of a company, so a stock, I pick capital light, hard to copy businesses with room for growth, margin expansion possibilities, pricing power, or network effects. I won't buy a company unless I can see for myself that it has the moat I can measure. That's why I'm building my moat score tool and my quality score tool. Because I'm a programmer, I can make use of this to make it easier for me and other people to rate a company just in one look. And so I just don't want to focus on the best ROIC. I focus on the causes, the high pricing power instead. This is the cause of the high ROIC. And my ideal situation would be a capital light company with very fast revenue growth, at least 10%, margin expansion occurring, and a very dominant market position, at least 20%. But of course, it can be sometimes really small in the overall market, yet provide a critical link in one industry. And my approach is to buy highly concentrated positions in monopolistic companies. Why? Well, because I don't want to do diversification. I want to do strategic, concentrated positions. So I take confidence in my decisions and not just diversify because of fear of losing money. Pillar number two, the systematized investor. I don't gamble or own stocks for periods of time less than 5 years. This is the biggest cause of underperformance of many investors. I don't buy something just because someone else mentions it on YouTube. I, unfortunately, have bought shares of companies such as Booking.com only because I heard another YouTuber mention it. It was Joseph Carson. I'm not saying it's a bad company, but I haven't done proper research and that's why I sold it. A broad conviction can be deadly, as you can see here. I need to formulate my own investment thesis and create a 5-page PDF, which, by the way, isn't going to be just confirmation bias, but it will outline the risks, the strengths, the company's moat, opportunities for growth, and the valuation. And it must include a page where I answer questions which are designed to kill this idea. For example, what is the single most compelling bear case for this company and why is it wrong? If I had to put 100% of my net worth into this for 10 years, what are the three things that would keep me awake at night? Who is the smartest competitor and what could they do to destroy this company's moat? I need to be absolutely sure I know what I'm buying. I will also write down the thesis invalidation conditions, which, when met, mean I will sell a position. For example, I will own a company like Microsoft. So I will say if someone who is competing with them will make them have lower gross margin for 5 consecutive years or something similar. For example, here we have for Visa. I should only buy companies with a margin of safety, so I will buy them if they are undervalued. But if a company that has shown stable revenue growth over a long time, for example 5 years, is constantly expensive, I can enter a position. For example, you have Costco. Now I analyzed it at some point. That was a long time ago. It's a good business. Of course, many people are saying, oh, it's expensive, I'm not buying it. But I read a book recently. I think it was Quality Investing or something with Fisher. I don't remember the title, but I just wanted to tell you that companies which are of high quality usually aren't cheap, and so I will buy a company based on quality, not on the price. Of course, undervaluation is what I will focus on, but if I find a company that is really good, for example you have ASML or Duolingo, and while they try up in their valuations, I recognize their quality. I will also spend at least 15 minutes a day analyzing different companies and recording it all in my investment journal. In case you didn't know, I have my own investment journal where I go over many different companies. For example, I went over TPL and Viper Energy. I went through Cohn and Schindler, and so on and so forth. Right now, I'm analyzing Adyen and Paychecks, and I go over all of those companies. I answer 4 different questions. For example, what is their business in very simple terms? I'm discussing it with an AI. I'm trying to understand how the management is investing their money. I'm trying to understand all the risks that go into investing in such a business. And I try to identify all the elements of the moat that they might have. I'm using my stock analysis tool for that, Market Vision. But of course, I'm also using, my own brain. So I read reports, I chat with an AI, I gather information. I use Notebook LM, for example, to do those audio overviews. I like them very much, those chats between two AIs. I like them really much because, you know, it means that I can listen to some, well, quote unquote, people discussing a subject that I like, which is a certain company. And, that is what the investment landscape will look right now. AI is changing all of the ways we are learning, and we should embrace it. Not. I'm also going to keep the emotions, decisions, and reasons in my investment journal when I buy or sell a position, so I can come back to it later on and see what I did wrong or well. That is very important, so we can then later on judge the decisions which I made, because I will write down how I felt. Even though investing isn't about emotions, I shall write them down because that can help me cope up with behaviors which aren't going to be good for my investing. Pillar number 3, the last one. I own a business, not a stock symbol. When I buy a company, my holding period is indefinite from the beginning, meaning I won't be worried about market volatility because I made a very confident decision. Instead, I will take the time to analyze a company carefully during market downturns to see whether it's a good opportunity to buy it right now. That's how investors should behave, in my opinion. We shouldn't be scared that a stock is going down. We should hold it. At least that's my view. I will make calculated decisions only, not based on sentiment of other investors. I will buy a company sometimes not only because it's cheap. A terrible business at a cheap price is still a terrible business. Again, repeating myself. I won't sell it based on short-term variations in its share price. I will only sell a company if the 5-page PDF investment thesis is not relevant anymore. That is a really, really important aspect of my investment philosophy. So I won't click that sell button even though it's tempting. you know. I will take a look at each company in my portfolio at the end of the year and answer these three questions with brutal honesty. The moat. Is the moat wider, narrower, or the same as it was 1 year ago? I have to present one piece of evidence, for example, my moat score. Capital allocation. How did management deploy the company's free cash flow over the last year? Buybacks, mergers and acquisitions, dividends, reinvestment. Was it brilliant, acceptable, or poor? I will need to develop a way of ranking that systematically. The thesis. Does my original 5-page PDF thesis remain 100% intact? If not, what has changed? I shall write it down in my investment journal or on my online notebook. The thesis invalidation conditions. Were they met during the past year? At the end of the year, I will also calculate the CAGR of the total portfolio and how it has stacked up against the index, for example, the S&P 500. I will analyze this over the whole history to see how my strategy is performing. And that is basically what I plan to have my investment thesis work out. Of course, this doesn't mean that this won't change in the future, but this is the base which I'm setting for myself. At the age of 18, I have opened the IKE account in Poland, and that's why I've been selling my positions from trading 212 from my dad's account, because he agreed that I can invest when I'm not 18. My money, I put it in, and now I started taking it out and planting it on my IKE account. Right now, here you can see Caterpillar 101% up. Well, this isn't actually something which I'm very happy about because it's a company I haven't done proper research on. It could have just as easily gone the wrong way. Actually, at the time when I was buying it, I was actually scared because when I noticed that they kept their dividend during COVID, I wanted to sell the company the next day. But then I had to talk to my father and tell him, no, I will not sell it, and look where we are today. So I will be focused on capital light companies. And so, look, you have those companies right now here. And going on to my IKE account. Okay, guys, so we are back in the XTB app, the broker which I'm at. This isn't sponsored by any way. I just had to choose them because, well, they were the cheapest in my option. So here we have the IKE account. I had to buy back all the companies. And bear in mind, this is in Polish zloty, so this isn't in dollars. The prices here are in dollars. And you can see I bought ASML after this surge up in price. Well, it is negative, of course, but this is short term in my opinion. I will keep holding those companies and we'll see where it goes. I will post everything I can on my Substack and make YouTube videos. So thank you very much for watching and see you all later. Stay focused on the fundamentals. This isn't financial advice.